everyone, to the first edition of the Weekly Jab produced by the Crypto and Muay Thai podcast. The Weekly Jab is just going to be a very quick breakdown of what we're looking at in terms of analysis with Bitcoin, some of the analytics that we use with our investment fund, Valiendero Digital Assets, and we'll try to break it down and keep it as simple as possible so that individuals, whether you come from a technical background or don't have a technical background, can easily understand and comprehend some of the general direction and also what we're looking to convey towards individuals, whether traders, investors, or maybe just curious folks that are thinking about taking the plunge into the wild world of crypto assets. So without further ado, let's get started. So starting off, there is our macro indicator, which is called the Hurst exponent. So if you have time to look it up or you're that inclined and really want to dive a little bit more deeply, feel free to Google what the Hurst exponent is. What we've done is essentially create a proprietary calibration of the Hurst exponent specifically suited for Bitcoin. In a very, very simple version, all the Hurst exponent is a momentum gauge. And a momentum gauge specifically meaning being able to determine whether a market, in this particular case, Bitcoin, is trending or not. So the scale is between 0 and 1 for the Hurst exponent, with 0.5 being a random walk market, anything above 0.5 being a trending market, and anything beneath 0.5 being a mean reverting market. And what we were able to see whenever we did a variety of tests for Bitcoin with this particular metric was that whenever it went above 0.65, that was typically a good indication of a local inflection point for a bull or a bear reversal, meaning there was about to be a decrease in price, so that the momentum for the bulls had gotten so far ahead of itself or was getting ahead of itself that a reversal was going to be underway momentarily. And likewise, on the downside, we found that whenever the metric Hurst exponent was beneath 0.35, that was typically indicative of a bullish reversal point, meaning that the bear's momentum had gotten to such an exaggerated point or was approaching an exaggerated point that it became very oversold. So we look at both of those levels beneath 0.35 as an oversold level or an accumulation buy signal, or above 0.65 as a bearish level, so a overbought level, or a hedging looking to potentially liquidate level as well. So if we just quickly look through the history of Hurst exponent, and it goes back far more years, but just for simplicity, we'll just focus specifically on 2020 for right now. So what you see at the beginning, middle of December of 2019 last year, Hurst tucked beneath 0.35, bottoming out eventually at 0.28, and then began its march all the way back up to 0.74, where ultimately topped, which coincided with strong momentum and strong price appreciation in Bitcoin. From there, it began to roll over, which we would expect given that is a bearish inflection point, i.e. an overbought level. We didn't expect it to drop as largely as it did. I don't think anyone did. It was very unanticipated sort of event that happened at that particular time, but nevertheless, it occurred, and ultimately it bottomed out Hurst exponent at 0.24, again touching into the bullish oversold range, and triggered a buy signal, which began to roll up. That sort of went hand in hand with price increase as well. Did not touch a bearish inflection point and began to soften a little bit. So thus, we still saw some price appreciation, even though Hurst was beginning to roll over a little bit. And most recently, at the end of May, we got very near to a bullish inflection point, which saw a quick spike, a 20% spike in Bitcoin price, which topped out at approximately 0.7 for the Hurst exponent, hitting a bearish inflection point, and has since been declining and currently sits at 0.46. Since then, since Hurst touched 0.7, price has largely been trending downward, although it's been confined primarily within the $10 or $1,000 band between 10,000 and 9,000. Given historical imperatives and where Hearst is at right now, we would expect that price will continue to decline until we reach a bullish inflection point. At what particular level, we don't know. That's not what Hearst is here for. It doesn't give an exact prediction for price in terms of Bitcoin. It just tells you which way the momentum is going, calculates it, and then if momentum has gotten too far on either side, whether it's on the bulls or on the bears, it tells you that that momentum is likely to reverse, thus kicking in either a new wave of bull cycle or bear cycle, depending on which particular side. And whenever we look at some other indicators, we marry what we do with Hearst with some more technical indicators to give us a little bit more granularity to be able to see, to strip out not just some of those larger macro plays where we look at the Hearst exponent as a little bit more of a macro tool, whereas the risk indicators that we have a version 1 and we have a version 2. I'm showing the version 2 right now, is a little bit more of a macro, a little bit more of a micro indicator. So again, the same exact scale at 0 to 1 and the same exact buy and sell levels are the oversold bullish inflection point beneath 0.35 and the overbought inflection point above 0.65 all still hold true for our risk indicators. As you can see, they're just a little bit more sensitive given the granularity of data that it ultimately collects. This particular one, just for a quick example, okay, so just for a quick example, just to be able to show again, at the beginning of this year, 0.27, a buy signal, which coincided with a strong up push in price, ultimately topped out around 0.67, so not as high as Hearst. Saw a huge drop. This actually fell far further than the Hearst exponent, touching 0.17 approximately, and then followed in lockstep, unlike rolling over a little bit with Hearst, until it ultimately reached a peak of 0.71, which has kind of been declining and coinciding with a little bit of with price topping out here and then starting to confine itself within the tight band. We did have a breakout here from oversold levels, which coincided again with a quick 20% price spike, but that quickly reached an overbought level, so approximately 0.7 again. And since that time, price has still been confined, but largely trending downward. And Hearst recently, or I'm sorry, this risk indicator recently has continued to drop further and further and now currently sits at approximately 0.42. So with those two indicators that we look at, we're seeing that the overarching trend for price since the halving has been primarily downward, although price has held up rather well given the situation for how steep the slope has been for both our risk indicators, but also the Hearst exponent as well. We do expect that further price depreciation will continue, just given the Hearst exponent reading and also some of the technical analysis charts that we look at as well, which we'll dive into in later sessions. I just wanted to briefly touch into this, knowing that this will be a little bit longer winded of a video, given it's the first time and I needed to explain things in a little bit more in depth than I will in the subsequent videos. But given the trajectory and the slope of the Hearst exponent, the downtrend is still firmly with the bears at the current time. However, any demonstrable decrease in price will likely find Hearst and our risk indicators back in an overbought situation, meaning levels beneath 0.35. Thus, price will be likely to catch a bounce, depending on. So how long that particular bounce will last will depend on how far price fell and whether or not the Hearst exponent actually hit another clearing event, i.e. another bullish inflection point beneath 0.35. The risk indicators are a little bit more sensitive. They can still touch a bullish inflection point and ride a bounce, ride up quickly, and then begin to come back down, whereas Hearst is far less sensitive to some of the day-by-day gyrations, and you gradually see how it plays out on a more macro level. So in summary, The current downtrend for price, based upon some of the quantitative analytics that we look at, is down, but we're gradually approaching a bullish inflection point. So any demonstrable decrease in price will likely be bought up, especially the further that it goes down. So anything that begins to touch 8.5 or 8,000 is likely to be very strong support and be bought up quite quickly, coinciding with either the Hurst exponent or this particular version of the risk indicator touching a bullish inflection point as well. So with that, we'll conclude the weekly jab. If you have any questions, please feel free to drop those to me. Like I said, this one was a little bit more long-winded and potentially a little bit convoluted for individuals that might not have a technical background, but I promise we'll gradually find our stride, simplify more and more, and then over the weeks, you'll be able to follow the flow in a little bit more logical manner, and then we'll include technical analysis charts as well to round out and have a little bit more holistic viewpoint for some of the things that we're looking at. So if you found yourself confused, rewind the video. I promise you that everything that we have here has been thoroughly tested, iterated on, and definitely works. There's no magic bullet. There's no panacea for doing your own research. This isn't investment advice. But what I can say is these are some of the analytics that we use for our investment management fund that we talk about in the Crypto and Muay Thai podcast that I also send out on our weekly newsletter, the Weekly Jab, coinciding with the video here each and every Friday on Substack to my subscribers as well. So until next time, I look forward to talking with you again. I will see you next week on the next edition of the Weekly Jab. Have a great weekend, everyone.